I hate that I'm like midway through this episode and people are just telling me that, and all I can do, I just want to check my account, and I check it, and like mid-sentence, it's just such a bummer to see your account get crushed 7 figures in 15 minutes. But it is, and we're losing a lot of money, just like I assume a lot of you guys are.
Hello, darkness, my old friend.
So just know that if you were losing today, chances are we were losing a lot worse than you. So I'm not doing much. Now, if I get to a point where I'm going to start to get margin called, I'll have to thin down. And that's where the big decisions get made.
Woo! Our speculators getting slapped silly in this market here, guys. My goodness, we are doing a deep dive analysis of my $245,000 dividend stock portfolio, showing you the good, the bad, the ugly, everything in between. So in the clarity of my transparency, help the channel out a little bit. Hit that like button, folks, because I'm going to share with you at the end of this video a tidbit of strategy that I'm doing that is going to save me tens of thousands of dollars in taxes moving forward. And you don't want to overlook this. It's going to protect your money here, folks. But let's get right into this by zooming out, and we're going to get straight into the accounts, and then at the end I'll do a final overview of everything so you guys get the big view picture. But starting with my tax-free savings account, the best thing I ever did in my life was get into dividend stocks, because my God, did they offer stability in rocky times like we are experiencing now. My TFSA largely unhit by this entire volatility in the growth stock sector, because taking a look at the very top, my Canadian banks, oh my goodness, coming back with a vengeance here, guys. I'm glad I picked these up when I did, because they are stabilizing everything out right now, along with basically my RioCan, which in this account doesn't look great, but trust me, the cost average is like $17, and I am up nice and healthy on this one at this point, which we'll see through my other accounts. Many of you OG subscribers out there know what I'm talking about. Taking a look at the US side of the TFSA, as I usually do here, like a broken record, guys. My Altria Group, my British American Tobacco, relatively flat, don't care. They pay like 8% yields, beautiful stuff. Apple, Microsoft, little bit of declines, but relatively flat trending. I want tech to crash more. It hasn't crashed the way I want it to, so I'm not in a rush to buy this. It really sucks when we go into a market crash and the only stocks that crash are stocks I really don't want to buy. But taking a look, the newest position that is crashing being SRAC. I did buy more of this. Luckily, all my med profits, but oh my God, my space company, guys, my space company. I'm fairly confident in the future of space. I bought this presuming that there was going to be a lot of volatility. I'm holding strong, baby. Them diamond hands could bite me in the ass here, but I believe in this company. So taking a look at Stag Industrial, I should have put all that MindMed money into Stag, because Stag's doing great, guys. Those wonderful real estate investment trusts. Taking a look at my managed account, where I got a good chunk of Facebook. I got Lockheed Martin, which I did not include in my portfolio overview because this is mostly the bank's money. Thank God for dividend stocks, and let's hope that one doesn't crash. MindMed in here, sold off like wildfire down to $8,437. Not even 2 weeks ago, this position was worth over $12,000. Here is the RioCan making up for the losses in my TFSA, and then my largest stable Roadhouse Acquisition Corp position down 44%. Holy crap, guys, I do experience losses. I'm not a genius at this any more than you are, but I'm sure as hell going to hold the companies I love, and I would much rather accumulate than sell shares like you paper hands out there. And usually it's me that's paper hands. For once, I'm not paper hands today. I mean, that deserves a like in and of itself. For RSP, my Registered Retirement Savings Plan, BABA in here was the replacement company for Tesla. Tesla is now back down to where I initially sold it, which is mind-blowing to me. If Tesla drops more, would I buy some? Probably not. I've told you guys aggressively, I will only hold Tesla moving forward in ETFs. I don't want direct exposure for the primary reason that it is a spec play, just like any of these other companies I hold in here that are extremely volatile, and their future completely hinges on the reality of self-driving. Now, could I miss a lot of upside potential to the release of self-driving? Absolutely. But I will gladly buy into Tesla when self-driving is a real thing. I just don't want to buy into it with everything hinging on that reality. And I know that's an aggressive statement, but so be it. It's my money, and I put my money where my mouth is. Taking a look at my RBC account, guys. This account actually doing really well. Again, thanks to RioCan, thanks to the banks, thanks to buying actual companies that aren't hype plays. Because if we go down to the bottom here, everything is all on fire. I remember there's a guy out there, he's like, why didn't you wait to buy the QQQ ETF? Well, because I took MindMed money and positioned it in here. I could have waited a little longer, got a bit of a discount, but heck, to be only down 8% against where MindMed is down right now, like I said, it offers some stability, and I still believe in the QQQs. I'd actually still be buying them here for that matter. ARCG, the ARC Genomic ETF, kicking me right in the square of the Yes, I said that. I'm down almost 20%, not as bad as something like my SRAC up here that I'm down 38% on. But nonetheless, guys, you need to be solid in your stock picks, because when I first bought Tesla, guys, it dropped immediately 50%. No joke. I bought Tesla right before it dropped 50%. And then you know what happened a year later? It went up several 100% for me. And that is how you have to view the volatility in these speculations. You really need to understand that these things could drop 50% at any given time. And that is what we're experiencing now. And I should be throwing money around, because a lot of you hate when I throw money around when things are good, but not when things are bad. But this is actually a good opportunity. Right now, the portfolio, guys, has changed drastically. We can see that Ryokan is now making on the risk tolerance pie about the largest position being 12%, which I'm actually still relatively happy with. It's almost a $30,000 position, way bigger than I would have wanted it to be initially. But for the setup that we are currently experiencing, I'll hold strong here. I'll keep collecting the dividend and rediversing it into some other companies. Other than that, take a look at my risk spectrum here, guys. Do you remember not even a little while ago how much my risk part of my portfolio made up the entire thing? It went from like 11 or 12% just a couple days ago to 8%. My growth, hinging relatively flat. I think it was at about, I don't know what my exact growth weighting was, but it's still relatively flat, with the dividend slowly creeping up again while everything else kind of fades into a compression here, because obviously my dividends are completely unchanged. Nothing has changed in the value of my dividend holdings, whereas my aggressive growth has pulled back quite a little bit by about several $1,000s, and my regular growth has only pulled back by about 4,000 or 5,000 at the most, nothing extreme here. So pretty happy with the idea of my diversification, but how in the future am I going to make this even better for myself? Well, what you guys need to understand here is there is a lot of different ways of operating brokerage accounts, and I've come to the conclusion now that I've maxed out my tax advantaged accounts that why am I trading in regular brokerage accounts when I could simply open up a corporation? If I open up a corporation under my business and all my social media and this marketing and website stuff, I can literally reduce my tax rate by more than half. You guys can really quickly see what I'm getting down into here, because I talked to my accountant about this and it seems like a brilliant idea, because if I make myself $100,000 and I pay myself $50,000 being an employee, I will literally pay half the tax than I would pay if I just raw out made $100,000. Now, this is some tricky business. I am not savvy in this at all, and also what it does is protect my money from me getting sued and some other factors that do come into play. Opening up a corporation, guys, is one of the most brilliant things you can financially do if you start accumulating large amounts of wealth. I have learned from the great Robert Kiyosaki and many other investors out there that this is something you want to do a little earlier on in your career rather than when you have millions of dollars, because when you have millions, it gets a little bit more complicated. But what I'm thinking about doing is when I set up this corporate account, presuming everything sits kind of where it is right now, I can actually sell my stocks at a loss, take those losses, write them off against my income, take that money, put it into the corporate account, buy those stocks back, and then any profit that they do make moving forward will be done under the corporation. This is some really interesting stuff to me, and I'm going to pass the question off to you. What do you guys think about all this in that comment section below? Things are ever evolving on this channel, and it's crazy to think where I was 2 years ago to where this channel has evolved along with my own personality and personal well-being. And I hope you guys have learned something along the way. In light of all of this, if you guys want to continue the conversation, as always, we do live streams every Friday night over at the Passive Income Educator. We will be talking about strategies around corporate accounts, what's going on in the stock market, stock picks, things worth buying, along with some conversations I've recently had with people that actually work at SpaceX and some of the frontier leaders in the space industry. And oh my God, I'll be posting some videos of that over the weekend. So stay cool, stay awesome, folks. And I look forward to catching you tomorrow.